The IPO rush continues on D Street and one more IPO has opened today. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and in this video I'm going to be telling you all about the new IPO that's hit the D Street. I'm talking about Azad Engineering, which has launched its issue today. That's December 20th and will be available to subscribe to this issue until December of 22nd, 2023. The price band for this IPO has been fixed between 499 to 524 rupees per equity share. Now, this is a 740 crore rupees IPO, the issue size, combined with a fresh issue of shares of 240 odd crore rupees for the company and an offer for sale which is for 500 crore rupees from the existing shareholders. Now, what does the company aim to do with the raising of the funds from the fresh issue? The company aims to use the fresh issue proceeds into strategic avenues. Azad Engineering plans to allocate 60.4 crore rupees towards acquiring a plant and machinery. Alongside, a significant portion of 138 crore rupees will also be used to retire the debt on the company as well. Now, investors looking to participate in this offer should note that the minimum bid stands at 28 shares. So, one lot will be for 28 shares and then in multiples you can apply for several bids as well. Now, this sets the minimum investment that you need to make as a retail investor for this IPO will be at 13,972 rupees at the lower end of the price band and 14,672 rupees at the upper end of the price band. Now, what does the company really do? First, understand that. Now, it was established in 1983. Azad Engineering has 4 state-of-the-art manufacturing facilities in Hyderabad, Telangana, catering primarily to original equipment manufacturers in the aerospace, defense, energy and the oil and gas sectors as well. Now, how are the financials of the company? Has the company been posting robust results of late? I will tell you. Azad Engineering experienced financial volatility. It witnessed a 71.2% year-on-year decline in the profit, amounting to just about 8.5 crore rupees for for the entire quarter ending March of FY23. And then this decline was attributed to weak operating margins and elevated finance costs as well. Despite this, the revenue from the operations in the same period grew about 29.4%, reaching 251 odd crore rupees. EBITDA also increased 16% to over 72.3 crores. However, it was the margins that saw a decrease of 330 basis points, settling at 28.7% compared to the previous fiscal year. Now, what are the key risks here? Now, as per the experts, the company depends on third-party suppliers for raw material, plant and even machinery and components. So, that is something that is being seen as a risk because some of its manufacturing facilities and offices also included the registered and the corporate offices. They are also not located on land parcels that are not owned by Azad Engineering and that are held on a leasehold basis as well. And there could be a chance that the company is unable to renew such leasehold rights and in turn affect operations as well. So, these are some of the specifics that are being seen as key risks for the company. The big question now comes that should you be subscribing to this IPO looking at the kind of listing gains that we have been seeing in this current IPO season. Now, what are the experts saying here? Canara Bank Securities has suggested subscribing to this IPO, emphasizing that the company has a track record, sound business strategies, notable revenue growth as well. However, they have given a caution about the relatively higher valuation at 292.7 times price to earnings compared to the industry peers. What does Nirmal Bank say? That has shared a similar sentiment, recommending a subscribe rating based on the extensive efforts by the company over the years to qualify and to also in developed components as well. And they have also highlighted that the company's competitive edge is also there, which is again a positive due to the high entry barriers, and they also see a foreseeable potential premium valuation compared to peers just because of its high competitive barriers as well, citing a strong track record and growth outlook as well. Now, both these brokerage firms definitely acknowledge the company's robust growth trajectory, but at the same time, they've cautioned potential investors about the comparatively higher valuation in the market. Now, what is the listing date? The company's IPO, which has opened today and will shut shop on Friday, the tentative listing date has been fixed as of now on Thursday, December 28, 2023. Watch out for this space as we continue to tell you what does the grey market premium for this IPO shape up in the coming days as well. Many thanks for tuning in onto this special edition, but do stay tuned onto Business Today TV. Don't forget to subscribe to this channel and continue to engage with us on our social media platforms to get everything that you need to know from the world of business and stock markets.